How you doing, guys? Coach Joe with a little update on macroeconomic conditions. Obviously, we're in an inflationary environment. Things are costing more, as if you need somebody to tell you that. Food, gas, just about everything you pay for, services. Your dollar's not really going as far as it used to. And there's a lot to blame for that. We got macroeconomic conditions such as war overseas, rumors of wars. We got Russia, Ukraine, China wanting Taiwan, threat of nukes. We've got supply chain issues. We got billions of dollars on port in Cali and no one to unload them in the US. We've got COVID lockdowns in China. And we've got all the spending we did to boost our economy during COVID. And now we're sort of paying the price for that because interest rates are actually going up. That's the Fed, one of the Fed's key tools of fighting inflation. And although you may notice something in the mortgage with the housing market, with mortgages now, they're getting cheaper, yes, like houses. The housing market has been coming down a little bit over the last month or two. House prices have been getting lower, but it's really not getting that much cheaper to own a home due to interest rates. I want to show you a little bit of what I mean on how interest rates can affect housing and maybe how you might make a decision if you're looking to purchase a home right now, or even looking to refinance. Probably not a good idea right now if you got an interest rate when things were pretty low, maybe a 2 or 3% interest rates, but things have gotten a lot spicier with the interest rates. Now, I'll show you a bit here. See, when interest rates go up, it actually is the increase of the cost of borrowing money. So let's take a look. Average mortgage about $220,000, a little more, but I accounted for that. Now, the interest rate right now for mortgages, average for a 30-year loan, about 7.1%. But I just want to show you, in a rising interest rate environment like we have now, what exactly interest rate increases do. This 5.5% is what you were able to get in August for the same 30-year mortgage for the same amount. Check it out. So your monthly payment would be about $12,051. And your interest over the total life of the loan, let's say you pay no extra amount, no accelerating, no biweekly payments, no refinancing, you pay about $230,000 worth of interest. Believe it or not, that's pretty normal. And that means total, between that loan and the interest you paid, a little over $450,000. Now, of course, this payment is about your insurance, without property taxes. You're just straight out principal and interest mortgage payment. Check this out though. Now, it's October, and the average mortgage interest rate for a fixed 30-year, 7.1%. Check it out. Your payment in just 2 months jumped from $1,251 to $1,481. That's $229 more per month. What does that equate to? Well, over life of the loan, again, no early payments, no biweeklies, no refis. You now pay $312,000 interest over the life of the loan. That's $533,000 total. So your interest, your total interest over that same time period, in 30 years, 2 months worth of interest rate hikes will cost you $82,700. That's the difference between the total interest and or the total payment. It'd be the same difference because the rest is just the amount of the loan, which is $220,000. So the interest increased $82,000 over 30 years, and that's less than 2% of an interest rate hike. Now, spoiler alert: interest rates ain't done; they're still going up. November 13th, the Fed meets again. They expect to hike rates, and on December 2nd, when they meet again, unless inflation takes a nosedive, which I just don't see, they're going to raise them again. And 2023, maybe more coming. So what does that mean? Just because housing prices may be cooling a little bit, let's say the housing market in many areas, house prices are going down. Oh, look, great. Let's just take off $10,000 here. But look, with the higher interest rate, remember, it was a $1,251 mortgage payment before at $220,000 in August interest rates. But now, even if you reduce the amount of the mortgage by $10,000, $220,000 to $210,000, the higher interest rate still has you paying more. For recaps, with the 5.5% interest rate that you could have gotten in August, $220,000 mortgage, had your total interest at about $230,000 over the life of the loan, still $298,000, all things equal. So just because the price of the home is going down, let's try it again. Take off another 10 grand. Price of the home going down doesn't mean it's going to be cheaper for you to own. It all depends on how much you borrow. Let's see, we're still paying over 50 grand more over the life of the loan. So what can you do? Well, I know a lot of people are waiting to buy homes. You know, the home values are decreasing, but they really don't see the cost. I mean, that's great if you don't need a loan, or maybe if you need less of a loan, which is why I say for right now, it may not make sense to wait to buy the home if your reason for waiting is the value of the price you pay for the home going down. Because the more you need to borrow, you're gonna get it anyway. You're gonna get the elbow dropped on you in terms of how much you're actually paying. So what the best thing you can do is increase or improve your cash position, make a bigger down payment, or maintain some agility. Save up some extra cash. Maybe you can make some early payments. I mean, if the interest rates do a super nosedive down to below 1%, which I don't see any time in the near future, which will probably translate to mortgage interest rates being 3 or 4%, then maybe you refinance later on. Doesn't always make sense to do, but you might be able to save yourself there. But who knows when that's going to happen? How long are you going to wait? 3 years, 5 years, 7 years? If you plan on getting a home for your lifestyle, it's just the best thing you could do, save up some cash. Don't borrow as much, or at least put yourself in a position where if you do end up with some ridiculous rate, I'm almost guarantee you that it's going to be over 8% by the end of the year with these mortgage rates. But at least maybe you can accelerate these payments, pay them down, do bi-weekly, do an extra payment at the beginning of the month, and sort of lessen the pain on your total interest paid and the total amount you'll pay over the life of your loan. Leave your comments below. Your feedback helps me to improve the channel. Like the video, subscribe if you haven't already, and if you got value from this content, hit the share button to spread the wealth.